The world of investing is full of acronyms, and many people look at acronyms and secret formulas to beat the markets. But are Moat stocks the answer? What is a Moat stock? The most overactive trade, or what is a Moat stock? We'll find out from our guests this evening. This is Tonight. I'm Bruce Whitfield, and tonight I'm joined by two fund managers, Dr. Adrian Saville, Chief Investment Officer and Founder at Cannon Asset Managers, and Sasha, Naryshkine, Director at Vestact, for their take on moats. So you're scraping the bottom of the barrel here, Dr. Saville. Moat stocks, most overactive trades. What's a Moat stock?
Moat stock is something that has some type of identifiable competitive advantage.
So something that is a solid fortification with a good sort of safety net around it, a barrier.
Where are we going with this? But
no, that's a castle with a moat. I mean, you're the one who's talking moats. I have no idea what moats are.
Absolutely, it's got something that sets it apart, and the fact that it is a moat suggests that this competitive advantage, which is a horribly overused term, but this competitive advantage has some degree of sustainability to it, and that it is defendable.
So monopolies, would they be moat stocks?
Well, I think there's another important attribute that you have to put in, and that is that these businesses have to generate a return on capital that is substantially above their cost of capital.
So SAA, which has a monopoly, would not be a
does
moat
not have
stock.
a moat, and nor does Eskom.
Eskom wouldn't be
nor
an
does the
example.
Post Office.
Okay, so what would then be what would be an example of a moat stock then in the South African context?
There's many in the South African context. A great example is Aspen, which owns unique molecules.
Have you guys conspired? Because this is his favourite hobby horse at the moment.
I'm just a listener right now.
I'm trying to get some powder onto my side here. But Aspen is a great example.
Yeah.
They've shown over many years a return on shareholder capital that is way above the cost of capital. And the fact that their molecules can't be copied. They have unique attributes.
Is that universal across the drug sector? I will include you, Sasha.
Well, it's fine. I'm a great listener.
But I mean, is that universal across drugs companies generally,
no, it's not.
or
So
is it Aspen specific?
It would be company specific, because you could find a generics manufacturer, in other words, they don't own the molecule, but they have some superb attributes such as operational agility, which gives them remarkable profitability in their operations.
Okay, so would Naspers be a moat stock?
I see where we're going with this,
Yes.
But yes.
Okay, so
it
Naspers would be a moat stock. Okay, no, that's fine. And what's your other favourite hobby horse? I've forgotten.
Favourite?
Yes, your other favourite. You've got three favourites.
No, you're not allowed to have favourites, Bruce.
Okay, you have three shares that you prefer more than any other.
Well, at this present time.
Yes.
Yeah, we've held MTN, although I would hardly call that a moat stock by
Not on that
Adrian's
basis, no.
definition. Although I guess you get to a certain size and scale where it becomes difficult for competitors.
But you buy the moat stock theory. I mean, it's a nice. It suggests that these are companies that can continue to grow. They can raise debt because their returns are so good, up to a point.
Well, how much debt can you raise? I think also, I mean, you could argue maybe Apple falls into that category.
Yeah.
You could argue that
Unique,
Yeah, I mean,
unique technology, hard to.
Apple are actually a replicator.
Yeah, not so unique
Yeah.
technology.
So they're
Fantastic
a
copier.
replicator. and
But they, what do they do?
The
that
modern
gives
day
them the moat?
Xerox.
What do they do?
they
that
have
gives
Sir
them the
Johnny Ive,
moat? Okay, well,
who's head of that design team, who's been knighted for his brilliant design. I mean, you've got to be that good. You're either going to be Richard Hadley or Ian Botham or Sir Johnny Ive. You've got to be that good at designing a product that is so far superior to its competitors. I often ask myself the question, why is it only Apple that's able to have such an incredible piece and people have to get the new one?
And
I don't know why.
They'll be to pay 2 or 3 times the price of a rival.
Well, I use a Mac over the rival, and I tell you, and I've never driven a fancy car, but I can imagine it's like that. You open it up, you stick your password in, and you're exactly where you left off. There are no updates every 2 minutes, Please shut down, and you like half an hour later, you're sitting there.
I'm loving your Apple obsession.
If you look at Apple's
back to investing.
performance over the last 12 months, whereas most US firms have struggled to maintain their top line because of the strong dollar selling into overseas markets, Apple not only has maintained the top line, grown the top line, they've grown the middle too.
And 2/3 of their revenue is derived from internationally.
Outside of dollar,
Yeah,
yeah.
absolutely. So Apple is a great example. What strikes me as interesting, though, is Naspers is a moat stock. Now, this is Mr. Deep Value.
No. Because he can identify a great business, okay? But the price is, you must separate. That's what a lot of investors can't do. They take a price and a business, and Adrian can separate the two.
Okay, so it's a great business based on the moat philosophy, but you go nowhere near it as an investment. So why are we then looking for these great moat stocks? We're looking for great moat stocks that offer great value, because then you're guaranteed a return in what's going to be a volatile and choppy future.
Just before I go there very quickly, whilst Naspers has a moat, I wouldn't say that its moat is wide.
It's shallow.
No, its moat is very deep right now. But if someone jumps across that moat, their competitive advantage can be matched.
Okay.
Yeah, let's face it, upgrading your avatar online on your mobile phone, in this case, while you're gaming, because that's entertainment. That's what passes for entertainment in China. Someone can replicate that with a bigger, better network of games. But in the interim, Tencent's also morphing into something different.
Yeah.
But that's where their moat is. Their moat sort of widens a bit as well as they evolve, and it's about keeping your defences robust. Anybody who's
that's why a lot of the people who actually work for Tencent work in R&D, because that's exactly what they're looking for.
Okay, so
the moat wider.
So let's find these moat stocks, because the moat stocks, by definition, then have got these great investable attributes, which makes them then, by any other mechanism, expensive. Sasha will disagree, but Aspen is expensive.
Sure.
Naspers is expensive. Apple, don't hit me, is expensive.
If you strip out the cash, it actually isn't. Trades below the 15 or 17 multiple of the S&P.
So how do we use this great asset of saying, let's look at companies that have got a strong moat around them, but then how do we use that for an investment case?
Well, I think there's sort of two philosophies that you could bring when you're looking at assets. The one is, this is a very average asset, but it's available at a great price. And there's lots that is written about and researched and demonstrated by what happens when you get those things wrong.
But so Warren Buffett buying railroads at a time when nobody wanted railroads.
Childhood obsession.
Yes. But
he owns a train set now.
He most certainly does. But that was genius at the time, because railway assets were underpriced and people still need logistics.
But a railway is a lovely example of a potential competitive advantage, because no one is going to build a parallel railway.
But did you think, Adrian, that he foresaw a fracking revolution in North America, knew that he'd be moving more and more as US moved towards energy independence?
No, I don't think he did, but he might be borrowing from Gary Player here, that the harder you practice, the luckier you get.
And Gary Player looks great for an old man.
He's not old, is he?
Oh.
He's very young.
We digress again.
What you're looking for in these businesses so the first type of business is, it's an average asset, but it's available at a great price. You need to be careful when you get in, and you need to be impeccable when you get out. And if you get it wrong, you're going to be taken out feet first. Iron ore is a great case in point. There is no competitive advantage in iron ore. It is a commodity.
It's all about price. You dig it out the ground cheaper than the next guy. You make the biggest margin. You survive longer in the tough times.
And you might be able to mechanize sooner and so on. But what you're selling into the market, you have no command over the price. You can't do an Apple on the crowd. Whereas in businesses that have some form of moat, they have some unique attribute that is hard to copy and is desirable. And it might be desirable from a product perspective, that it's fantastic aftershave,
which
expensive
you don't
watch.
Use.
Not recently, no.
Or it might be a fantastic process, such as mechanisms that allow you to move goods far better than anyone else. OneLogix is a great case in point. Or the Hyperloop. And in the case of these moat businesses, what you're looking for, and Sasha's put it perfectly, is whilst you can identify the moat and you can recognize the sustainable advantage, what you have to insist on is buying it at the right price.
Absolutely. So, are there any moat stocks that are even remotely attractively enough priced to buy?
Well, I would say that I think we represent different investors. We represent individuals who probably don't need to meet obligations on a month-to-month basis. Whereas someone who runs a fund and has retirees sitting in the background is looking for cash flows. So we're lucky in that we can invest for different people with different objectives.
Okay.
So if someone comes to me and they're 35, 40, 45 years old, all older than us, we have the ability to be able to say, this is probably going to be a much bigger business in time. I have no idea whether or not the price today that I'm going to pay is going to go down next week, go up next week, next 6 months.
Which gives you comfort then to buy Aspen and Naspers even at current prices.
Yes.
Sure.
But you are just, would be uncomfortable buying Aspen and Naspers at current prices.
And I think this is where investing very quickly turns to art, because if you look far enough back, any one of these, my colleague Victor von Reich describes these as compounders, and any one of these
Naspers 12
compounders
months ago was half of what it is today.
Sure. And any one of these compounders, if you give them enough runway and you get in at a sensible price, you will be more than handsomely rewarded in the fullness of time.
12 months ago, you would have said Naspers is way too expensive.
I think it's doubly way too expensive
And
now.
you were right. Except Sasha was saying buy them, and he was right too. but that's the great difficulty with it, and it's about what is the right price, the compounder. So Sasha didn't answer the question, so let me put the final question to you, Adrian Saville. Are there Moat stocks available in South Africa right now that are worth buying?
Yeah, and I think that there's a lovely basket of them. Case in point would be a business like Sasfin, which trades at just above book value for a bank that's not very expensive. And they generate a return on equity that is comfortably higher than the other banks, yet FirstRand is on 3 times book value. So Sasfin may not be a stand-up in the headlights business, but it has demonstrated over a very long time, it's been listed since the late 80s, that it's able to sustain an ROE in the high teens or early 20s.
So Sasfin's got a good track record. You mentioned OneLogix, which may be an opportunity.
OneLogix is another great example.
One more?
Well, let me throw in one that we've never spoken about on the show before, and it's a tiny, tiny business called Ansys.
Yes, the guys who do the signalling on trains. Yeah,
because there's more railway underground in South Africa than above ground. There is.
That's
in
working.
Mines, yes.
But okay, so any of those then, Sasha, would you take any one of OneLogix, Sasfin or Ansys over the other Moat stocks that we've discussed, the Aspens, the Naspers or the Apples?
No, I think liquidity is often key in our case.
$10,000 bucks. $10,000
Probably Sasfin is the one that I would pick above all of those three.
Okay.
But liquidity is an issue. But for people with long time frames like ourselves,
Because we're so young.
There
we go. For everyone else, though, yeah, okay. Guys, thank you very much. It was really interesting. I enjoyed the discussion. Adrian Saville, Chief Investment Officer, founder of Cannon Asset Managers, pointing his cannon at the Moat, and Sasha Naryshkine, Director at Vestact, who would like to float a boat. It rhymes, but it makes no sense. But that's all we care about this evening. Thank you for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.